fucking dream so big that they'll haunt you, or they'll calm you. That's how you know if you gotta go and get to win and not conquer. I had to go out and get it without a sponsor. Kept it real, never crooked, yeah, that's honor. Now I can go out and get it how I want to. Hashtag bless, I choose.
What is up, Rumble? What is up, YouTube? Well, welcome back to the Ryan Matta Show. We got a little bit of an emergency meeting going on. I got a special guest. Craig's going to be joining us again. We're going to be talking about rate hikes. Are they off the table? What's going on with CPI? We got some big data points coming out tomorrow. I know Craig wanted to jump right in here and get right into it, so I won't overtalk it. We're on a little bit of a time crunch. Craig, welcome back to the show, my friend.
Hey, Ryan. How's it going?
Dude, great, man. It's an honor to have you back on the show. I mean, I don't think there's anybody better to break down what's going on with these markets than you, so I'm just going to kind of give you the floor and let you roll with it, man.
Yeah, so last October, the Fed kind of did a pivot, and they started talking about, it started off with 3 hikes, 4 hikes, 5, 6, or rate cuts. So 3 cuts, 4 cuts, 5. They got as high as 8 cuts at one point, and that's kind of what the market was building in. And so, we're at the point now where after the data that's come out, we've had 3 hot CPI prints in a row for 3 months in a row. And then we had a couple hot PPI prints. So consumer price index, right? That's what those are, CPI. And then PPI is producer price index. So we had a couple really hot prints. And the Fed doesn't really know what to do with it, I don't think. So they started backing off in terms of time. They started pushing it back from a start in kind of March to May, June. And now after today's hot CPI print, they're starting to push it back to probably July to September timeframe is when they're going to start, or at least that's what they're hinting at. And that puts us into election timeframe, right? So that starts putting us into that November window. So they're talking about maybe, September, December, which is a huge change from what we originally saw, right? They were talking 8 at one point. And yet, look at the stock market. It hasn't really backed off yet, right? So something's wrong, right, Ryan? So as many as 8 rate cuts, right? As we rolled into the beginning of 2024, and now we have potentially 2 rate cuts. That's it. Maybe none, depending upon what happens with CPI and PCE, personal consumption expenditures, coming up at the end of the month. So we've got some problems here. Something's not right. And what we're seeing is the dollar really rallying strong today. So I'm going to jump over and show you a chart on this.
Jump on it, man. I'll give you the screen.
I've been out of town, so this is the first time I've had my camera up since we were on last. So
you're good, man. I'm ready for it.
All right. Let me see if I can jump over here. Okay. All right. So what we're looking at here is the dollar. And I like to work with harmonics, just for the audience that may listen to this that, didn't listen to our first time together. Mm-hmm. And so what this is it's a lot of things in nature work off of harmonics, right? So we can look at, a lot of different things. Distance, since we just had a solar eclipse, we can look at the distance between the sun and the moon, and we see harmonic levels, right, in terms of numbers and so forth. We can also look at it in terms of Fibonacci, things like that. I'm going to go ahead and throw my picture up down here in the corner, I think.
Yeah, do it up.
There we go. All right. And so what I'd like to do is look at markets from a harmonics point. And so what we get is we get a structure with this. Okay. So we get what's called an energy breakout zone. And then we get these harmonic eighth levels, right, to the upside and to the downside. So when a market breaks out from this energy buildup zone, it tends to work its way around these harmonic structures. And what I like to do is then take the news and apply it back to that harmonic structure. So it's the opposite of what they give to us. A lot of times they want us to just take the media and accept that for the truth. Mm-hmm. In this case, what we're trying to do is flip it upside down. So we take the harmonic structure and then we listen to the news. And what we can do when we see that is, what I'm expecting here is, I'll show you the Dow here in a little bit, but the Dow, we had a signal back in October of 2023, and that's what kind of turned this whole market around. And it's sort of caught me by surprise because I couldn't believe how quickly this market reacted to the Fed pausing. Mm-hmm. And then we also had injected in there was all the AI, right? So Nvidia was blowing out earnings, right? Everything AI. So it was hard to decipher what was going on. We clearly saw that the NASDAQ was leading the three indexes. So we saw the NASDAQ lead out of the gate. Then we saw the S&P kind of follow, and the Dow was the laggard. So what I'd like to do is today to kind of take a look at that and set this up so that as it starts to unfold, we kind of set the stage today, and we can look at, because most people are interested in, I think most of your audience is probably going to be interested in Bitcoin, cryptocurrency, and then stocks. It's because everybody knows stocks. And then we can even take a little bit of a look at gold. But I like to look at the dollar first, and this structure's old, right? So it's been floating around for a long time. But what that tells me is two things. One, this thing hasn't completed yet on the upside or the downside, and it's been a long time. And this is a very odd situation. Normally, when we get this kind of a signal, it's going to play out in about 6 to 8 weeks on average, statistically. This one's been running for, I'd say we're at like 12 to 14 weeks now. So this one's way, or maybe even longer. This might even be 16 to 17 weeks if I think about it. So this thing is way overdue. And yet today, what I'm going to do is I'm going to show you a couple things in here. So this probably looks a little bit messy, but all these blue dots on here are reactions to this harmonic structure. We talked a little bit about these futures markets. This is a future market. So this is the DXY. And just to give you a little perspective on that, think of it like a teeter-totter. We have the DXY on one side, the Dixie, right? And then we have on the other side a basket of currencies. So we have the euro, Japanese yen, British pound, Swiss franc, Australian dollar, Canadian dollar. And I think we have I always forget this one, Swedish krona, I think. And so the dollar's on one side, everything else is on the other side. So all these currencies can be garbage, Ryan, right? But one can be less garbage than the other one, right? So so what we're looking at here is the dollar today is less garbage than all the rest of them. And we know that they're all kind of a big hot mess. But what I really want to point out is this. We came down here. I've got this one marked, right? That blue dot. We came back down to the upper end of this breakout zone. So this pink shaded area is this breakout zone. This is where this energy builds up. And what we look for is a reaction against this breakout zone. So we got one here, and this was back on March 26th. This is probably about the time we were talking. I think it was. So I think this is when we did our show together. And we had this, and then we had a nice pop, and the dollar got up here.
Yeah, you called that too. You said the dollar was going to go up.
Yeah, and then we came all the way back down here, and this is April 4th, right? So clean that off there for us. Just a second here. And we came right back down, and we tested the exact same level right there. And then we came down again on the 9th, which was what, yesterday? And we tested it again. And then this morning we get the CPI data, and obviously it came in a little hotter on whatever metric we look at. It was a little bit hotter than expected, mostly around services, ex-food and energy, that kind of stuff. Not to complicate matters, but the CPI came in hot, right? Just keeping it simple. And so we saw the dollar take off. And what's important here is it broke this prior high, right? So this is, if it holds above here, that's pretty significant. So what we're looking at next is, can it get up here to the halfway, right? So this is the halfway of this whole harmonic structure at 105.30, 105.36. And then the real deal would be as if we could get up here to this 107.08 up in here. This would be the full upside harmonic. And today we stopped. Basically, we're hesitating at the 3/8 right here. Can you see that light blue line?
Yep.
So this would be the 1/8 right here. The light green line is a 2/8, and this light blue line again is the 3/8, and this would be the 4/8 or the halfway. And so, what does this mean for us? Well, it means that tomorrow we have the European Central Bank is going to announce rates at 8:15, I think, in the morning. And then they're going to have Christine Lagarde, who runs the European Central Bank. She's going to come on, and she's going to start talking, and she's going to try to, use the bully pulpit to sort of work things around in their favor. What I'm afraid of here, Ryan, is this, that, the dollar is a representation of, economic, cultural, resources that are all within a contained area. The U.S. is kind of nice from the standpoint that the dollar has its own currency and it has its own bond market, right? So bond market would be, everything from overnight lending all the way out to 30-year debt, right? 30-year T-bonds or something, right? So you get the 2-year, 5-year, 10-year, 30-year. We get this debt market that can adjust. We talk about inverted curves, skewed curves, all different kinds of curves, what goes on with these interest rates at these different points in time, 2 years, 5 years, 10 year, 30 year. But Europe can't do that because they have a common currency across multiple nations, but they don't have a common debt. So we see if they show weakness, right? We're starting to see weakness in like Great Britain. We're seeing, some weakness in France. We're seeing some definite weakness in Germany over the last couple months. If Europe has to start cutting rates, but the US can hold pat or doesn't cut rates, what that's going to do is money goes where it's treated best, right? So it's going to go to the interest rate market where it's earning the highest yield, right? Does that make sense?
Yep.
So if the US rates stay high and Europe has to cut rates because they're in trouble for some reason, then what's going to happen is money's going to flow into the US to get that higher yield, and it'll flow to the US to get higher, what we call flight to quality, safety, right? If we get some sort of an event that surrounds this reason that Europe would have to cut. We know we've got Ukraine-Russia war that heats up. We know we've got, components of things that also feed from, China to India, all the way up through the Red Sea that also feed into Europe. So there's a lot of different things that can go wrong there. And if there was some sort of a faux or real nuclear attack, Europe would probably be impacted a lot by it, right? So we got to keep that in mind, right? All these risks that are building. And I think my dog's barking here. Sorry about that.
You're good. I can hear it.
Okay. So so what we're looking at is this rate differential is the big thing. And we also have to look at Japan, right? The Japanese yen is in deep trouble right now. They're talking about intervention. I don't know if have you been following this at all, Ryan?
No, fill me in. I'm all ears.
Okay, so Japan has had negative rates for like 17 years, and they just ended this negative rate policy about like a month ago, 3 weeks ago. And they went from negative to basically positive 0.1. So they're almost still at zero. There's a lot of foundational things that are going wrong across Asia. We see China's been weak ever since Trump put in a lot of the trade deals with them. We see that, you want me to flip over to this so that.
Yeah, if you want to, yeah. So I can get you a better quality picture. Yeah, just let me zoom you out in there. You can keep talking. You're good.
Yeah. Is that good? Okay.
Yeah, I got you.
All right, great. So we've got this three-legged stool of capitalism, right? Japan, Europe, US. And the biggest currency that we can trust over in Asia is the Japanese yen. The Korean won, not so much. Clearly not the Chinese yuan or renminbi, right? They have two currencies, internal and external. But there's a lot of problems going on that whole corridor. And what I'm looking at is to see if Japan's going to potentially start to fall apart. We see real estate issues. We see a lot of funds starting to weaken over there. And then we look at
Japan had to sell off all their treasuries too. They were holding a bunch of USA treasuries, and they would have to sell off the treasuries to buy the yen out of the open market to control inflation at one point, weren't they?
Yeah. So you're onto it. So that's the kind of stuff we're talking about. It's hard to know exactly what they're doing and what they're going to do next, but they're definitely have their finger on the trigger, because this 152 level in the end of the dollar is a problem for them. If this thing starts to get out of control, it's a big problem for them relative to the dollar. So we could probably come on and do a whole session on that sometime later this week or early next week if you want. But what we want to do is think about the yen is in trouble. The currency's in some trouble. The euro, if the euro starts cutting rates, what's it going to do? The euro could drop, right? So right now it's at like 108. Let me see if I can flip over here and show you.
Yeah, you can get back over there if you want. Go ahead.
Flip over here. Just pull up a chart of this.
There we go.
See if I can get this. Yeah, this will probably be, this has got a lot of stuff on it. It's kind of a mess. Let's roll with it anyway, though.
Yeah.
Let me just clear some of this stuff out of here real quick so you can see. What I'm really concerned with is, that should be pretty good. Okay, so what I'm really concerned with is this upward sloping trend channel that we see right here in purple.
Mm-hmm.
I'll darken them up here real quickly just so people can see them. Okay. So I'm concerned with this, and then I'm concerned with the retest of it right here, right? This is pretty significant. And again, this is the biggest component on the other side of that teeter-totter from the dollar. So if this thing starts to weaken and it goes back down in here to parity, so that would be, parity would be right around 100. So it would be a retest of this low. If we start seeing that, Europe's going to be in trouble too. So Japan's in trouble. They're flirting with danger. I could probably flip over to that real quickly just so you can get a glimpse of it. Let me go to the FX market. That'll be a little bit better.
Sure.
Here we go. So here's the FX market, right? So this is the yen, 1978, right? We got this trend line going down, right? We talked a little bit about this last time, these convergences, right? Where we get this triangle come together. So we've got this purple line down here that's coming up, the lighter line. And then we got this bold purple line, right? That we had 1978, 1998. We had a couple hits back in here too. 2015, another one here. And then we broke out in 2021, late 2021 right here. And it's been, and it's above a moving average. This is kind of the target zone for this yen up in here for a couple of different reasons. One, it would be retesting this prior low back in here. There was this big gappy thing that went on here. There's also some other target things that give us confluence up in this area. So we have issues with the yen. This is what they're worried about, right? This triple top here. This thing's almost going to blow this thing out, right? And we talked about if we stay positive after this, right after this thing, after what we call this apex occurs, the trend is up. So this thing's kind of a runaway freight train for Japan right now. So then we go back to the euro. We've got this, just to not confuse things here, we have this one we're looking at here is the futures market. The other one was the FX market. So the euro going down is the same thing as the yen going up. Does that make sense?
Yep.
So just keep it in perspective. I mean, I could flip over to that too and show you, but you know, it's sort of.
I get what you're saying, but you can do whatever you think is best.
Yeah, let me just show this real quick. Okay, so here we go. So this is the Eurex Forex. So what we'd be concerned with here is, well, this is euro to the US dollar. The other one's US dollar to yen, right? So it's just the what's over what, right? You know, of the fraction. In this case, we can see it here too, this upward sloping trend channel in the Forex market, and the euro is broken out below more than it has since 1984. And remember, this is kind of a synthetic euro US dollar because the euro only came into existence around 2000 when they basically compiled all those currencies. So it's sort of a synthetic. That's why it looks a little bit different, but it gives us a whole different perspective in a lot of ways. However, we're below it, right? This whole area in here is what concerns me, right? So this thing could start breaking down. And if we go back to the futures market, so this is the same thing as what we just looked at, essentially, right? This is futures market. That one's the Forex market. Same kind of a thing. We're retesting this channel. And we could go down. So we've got the yen's in trouble, euro's in potential trouble. And then we go back to the dollar, right? And we have this dollar, we have this harmonic structure, and we're looking at this 105.39 halfway level. We're looking at this 107.08 full upside objective. If we start to get above this 107.08 up in here, this dollar could really start to run. And here's why, Ryan, is that during 2008 real estate crisis, there was so much debt that went offshore, right? Because everybody was at such low yield. So what did they do? They went looking for yield other places. So they went to third world markets. They went places, did municipal bond projects, other things, invested in these third world markets. But the problem is you get something like Argentina, right? Argentina has this huge currency issue. Malay wants to peg to the dollar, but he can't yet, right? Even though he understands why he could or should potentially, he can't, not quite yet. And so if someone buys things in the Argentine currency and the dollar starts to run away from them, it's going to take more of their currency to pay a debt back or to buy something that's denominated in US dollars, right? So now it becomes this feeding frenzy where these countries have to start piling in to save face because they don't want to be the first ones to belly up. So that's kind of the situation we're in, where this dollar could, even though it's junk, right? We know it's junk for so many reasons. It could be the flight to quality, the safety play, right? Where the dollar starts to, could be a runaway freight train here. And there's a lot of reasons for this. I don't want to bore people with it and go into it too much detail. We could do a whole session on that sometime if you want some time. But I just want to point out yen falling apart, euro potentially starting to fall apart, especially if tomorrow, this ECB rate announcement tomorrow is a big deal. If they back off and Christine Lagarde backs off her no rate cut stance and they start indicating that June they're going to cut rates, and the US even pushes it out to August, September, it's going to create that differential that can get this euro moving, right? So we could start getting a domino effect, yen, euro, and the money flows into the US because it's the last place that's standing that's truly like, you know, Western economy. That makes sense?
Yeah, absolutely. 100%.
Cool. So are we pretty good with the dollar? Because I'll jump over to the
Yeah, absolutely. Yep.
Dow. Okay, so let's jump over here to the Dow. Okay, so I've been trading this today in a couple different ways, and so I'm short a couple of these right now. So this would mean like notional value is like what, 200 and some $1,000. So basically I'm short, you know, $400,000 worth of yen, right? And I think I made, I don't know, looks like, well, I think it's reset already, but maybe like 2,500, $2,000 or something today, but just kind of getting started, right? This was the CPI data up here today. You can see this big slide down here, right? That
You were
big move.
shorting it up top above that?
Yeah, so I was short, so I had some minis on. So I was reducing my risk. So I picked up a couple $100 this morning into the data, right? That way I reduced my risk, right? So I picked up a couple $100 there this morning, and then I switched over to the bigger contract after the data came out. And I think this is reset at 4 o'clock, so it's probably not totally accurate, but some of it gets taken away on a mark to market. But anyway, and then a little bit of NASDAQ, I was shorting that, and a little bit in the S&P. So I was shorting things pretty much across the board. I had some shorts on in the European, the German DAX, right? So that's the one I like to look at for Europe the most, is the German DAX. So it's kind of like our S&P. And then also a little bit in the Nikkei, I had a little bit of a short on. And so kind of across the board going into this. And it's always a little risky going into a CPI because anything can happen. It's truly like flipping a coin, you know?
Yep.
So, but afterward, and you can see the vast majority of the move occurred here in like 1 minute. This move down, right? It was almost in 1 minute. So the market adjusted pretty quickly. And after that, it was a lot of sideways chop. But we talked about this the last time, you know, when this red band goes inside the white, right? Starting to build energy, right? So we're starting to build some energy here for further movement. And so there's energy building here. And what I really want to show is that, I don't know how long this will take me, but let me get this first. So what we're really looking at here is the, just like we were talking about the dollar, right? On the upside, that 107 level would be a full upside harmonic. Well, this Dow hit its full upside harmonic back in probably late January, I think it was January. And it's played with this 38,524 level multiple times. It's clearly a significant level. And so what I'm watching for is, and I think we're going to get it, the way it traded today, you can see all this sideways activity. They're trying to delay it, but I think we're going to test this 38,524. And if we do, this will be the first one of the US stock markets to crack potentially. And so if we get below 38, we don't know what's going to happen, right? I can't say that we're in for a crash or we're in for a 10% pullback. I don't know that. But what I do know is if we get below 38,524, I've got a wall to lean against, right? So I can start leaning against that and I can start building a short position, right? So right now I'm kind of toying with it in a small way. If we break below 38,524, I'm going to probably get a little more aggressive and use that as my risk management level. Does that make sense?
Yeah.
So if we start to creep below that, I'm going to use these, you know, signals and entry points to find low risk entry points to start shorting this, you know, at 30, you know, as long as it holds below 38,524. Now, what I want to point out on here is that on the way up, the NASDAQ led the way up, right? So we talked about these signals that occurred. Hopefully I can get to some of this. I wish I was a little more prepared on this, but.
Oh, you're good. I know we threw this together last minute, man. Thanks for coming on and sharing this information with us.
Yeah, for sure. See. Okay, so here's the let me switch this over real quick. That way you get a little bit more perspective. Still not enough. See if that'll do it. Might take it a second to populate. I'm asking it to do a lot right here. But we'll let that populate here for a second while I talk about it. So we had signals in the Dow, the S&P, and the NASDAQ, all three of the big ones. And even in the Russell too, but we won't get into the Russell too much because it has a big regional bank component. But and this contract's rolled too, so it probably will. I don't even know how this is going to look once it populates. But the NASDAQ, well, this is pretty good. You can see it's a little bit messy because we're starting to get I had these in there for another show, these labels, but you can see the market came back down right here and tested this level again. This was on January 31st. So it got above it, came back down, retested it, and then it pretty much has stayed above ever since. You can see this NASDAQ isn't even close to its dashed green line right here. That this was its full upside harmonic at the 1748 level. So it's holding up way better than the Dow, right? And then if I flip over here to the S&P, see if we can see the same thing. It's going to take it a second to populate as well. The Dow was the laggard on the way up, right? So if this thing starts to break down, the reason I'm short the Dow, or the reason I'm focused on the Dow, is because there's a good chance that there's something weak in the Dow, right? Some component out of its 30 stocks. It's weak. It's going to start pulling this thing down. Could it be something that's European related? Could it have too much exposure to Japan? Could it have too much exposure? So you see how we're starting to connect it? So we're starting to connect this with this potential currency issue, right? See if there isn't a connection there. I don't know if I have
still
that.
can't believe we just keep putting in new all-time highs in the S&P 500. It just blows my mind, man, how bad our economy is.
Yeah. Well, we don't know what this artificial intelligence is really, what it really means. We don't know what it, we just don't know, right? We don't know. There's things we don't know, right? And, all I can say is that it seems a little odd to me, especially from a rate perspective, right? That we were at one point we had 8 built in, and now we have potentially 2 or 3 built in. We've delayed the time frame on it, and yet the stock market still continues to hold up. So unless it's artificial intelligence related or something else related, or even just an inflation hedge, right? This could be an inflation hedge. People are staying in the stock market.
I think that's what it is.
It could be an inflation hedge. Now, what we'll see though is, I wish I had these levels on here, and I wish I knew. Let me check this. Oh, here we go. There we go. So this was this works. Here we go. So this is the same kind of structure we were looking at in the Dow. And this is our level right here, 49.23 in the S&P. So you can see we're a long ways away, right? Look at that. We're 5,187 or 5,000, basically 5,200 on the close today in the S&P. And this upside harmonic is at 49.23, say. So, we're talking pretty big amount of space. If we go back to the Dow, right, we're almost right on it, 38,524. So the Dow was a laggard on the way up. It's starting to look like it might be that, but if we're going to get a breakdown, it's the canary in the coal mine here. We've got the energy, like we talked about. If this thing gets below 38,524, I'm going to watch all these indexes, but I'm going to be focused on the Dow mostly, right? Until it proves that something else is falling more, I'm going to try to stay on the Dow, right? And it's a little bit counterintuitive because typically when things start to break down, money goes into the Dow because it's big stocks, big Dow 30, right? Name brand stocks, people move into safety. So I don't really know what's going to happen here. All I know is that if European Central Bank comes out tomorrow and they indicate that they're going to start cutting rates and the US doesn't, we should see some fireworks, right? We should start seeing some fireworks.
This is so interesting to me, man. Thank you for coming on. I appreciate it.
Yeah. And if you want, we could take a quick look at the metals market's been rolling. And this is silver. So back on another show. Go ahead.
No, it's just weird today. It was like Bitcoin was down at 67,000. It looks like it was coming to the downside, and all of a sudden it just ripped right back up from 67 something all the way back up to almost 70 now.
Yeah. Well, let's talk about that in a minute, right? So let me just do silver real quick. So this was a target we had down at 2214 back here, and let me see here.
Yeah, you guys were calling the silver upside for a while, right?
Well, we called this downside, right? So back in here, again, this contract rolled. So there was a lot of data. The silver market came from around in here, 25, 26, 27, came back down, hit this 2214. We got this double bottom. We said this is a pretty safe spot to be a buyer, right? Because if you're wrong, you can get out, right below this 2214 level. And ever since then, you can see the silver's been climbing pretty strong. We also had this gold market. Let me flip over to that real quick. Hang on a second. Okay, I think it's ready. Okay, here we go. So on this one, we had a level up here. It's not, I could probably hunt it down, but I know the level. So it's 2201.80. So it's basically right there, right? So that was our full upside. Hang on a second. This was our full upside harmonic for this gold signal. So this was kind of a nice position to be in, back through, March 11th through essentially March 26th, because we went up to this level, this full upside harmonic. And this is what we want to see, Ryan, is some sort of a reaction there. We got a reaction, right? We blew through. We talked about this on your show that night. Remember that phony move up that we talked about? They spiked it.
Yep.
Does that ring a bell?
Absolutely.
And then,
100%. Yep.
yeah. And then we tested it. Then we tested it again. And then we got above it, right? We got a little bit of energy build up here. We had a pretty big run in gold. So I wouldn't be surprised to see gold, potentially come back down and retest this tomorrow. Maybe come back down to the 2,300 level, and then we'll have a decision point. If it comes there, can we get back down to this 2201.80? And again, this isn't the exact level, but it's close enough for talking points. And
oh man,
what's that?
No, I'm just thinking about Peter Schiff right now, talking so much shit about Bitcoin, and he's all gold's up a few percent in the last decade, and it's just funny hearing him. People were texting me a minute ago saying he's on MSNBC right now talking shit about Bitcoin.
Of course, right?
Yeah.
Well, he's having his heyday right now with gold, right? So, but this is the key, right? So you can see the reactions we had back here off this, and that's all we can ask for is a reaction. So that's if the Dow gets down to that 38,524, that's all we can ask for is some kind of reaction, and we can assess what's going on. So if it gets below, we might be something going here in the stock market to the downside, right? So we're just trying to lay this out. Could be the canary in the coal mine, right? Is the Dow. And then if we flip over to, so that's kind of the silver. So we've covered the dollar, we've covered the yen, euro, a little bit on the stock market. We know that the Dow is the laggard relative to the S&P and the NASDAQ, kind of summing that up. So we kind of know what to watch for. If you're looking for something and you're looking for downside, keep an eye on that Dow, right? Keep an eye on that 38,524 level. I will be, we can come back in and talk about that if you want some time. And then we know the silver market, 2214 was a pretty good entry. We could come up with some risk levels on that if people want them, if there's any interest in that. But the gold, it's a runaway freight train right now, as long as it stays above 2201.80. I'm actually short the gold market right now. Today was, I'm looking for this pullback into 2,300, and then I'll reassess at that point. And then if we go over to Bitcoin, because what we really want to watch is, what is it doing relative to everything else? It's holding up really well, Ryan. Look at it. This is good. So if the Dow starts to break down, typically we've seen Bitcoin be correlated to the stocks, right? A lot of times. That makes sense.
Oh yeah.
So it's kind of a risk on, risk off type of asset. But what we'd love to see is Bitcoin hold up if the stock market had a 3 to 5 or 10% correction or more.
Oh yeah, that'd be sweet.
That would be really nice, wouldn't it? That'd be the first time we'd see Bitcoin standing on its own legs, right? And maybe it's partly because, the ETFs, right? It could be also, it could also be because of the environment we're in. It could also be because it's finally getting enough market capitalization that it's being, respected as a true asset. So there could be a lot of things going on here from the Bitcoin standpoint. If it can hold up and the stock market sells off, that would be a really, really, really big landmark scenario for the cryptocurrencies. We kind of did that breakdown on it that night. I think we had I don't know where that's at. I think I may have left it on here. Remember that breakdown we did where we did all the symmetry?
Yeah, it's over there on the left with all the pink dots, isn't it?
Probably not that one. Let me see if I can find it in here. Yeah, I don't know. I'd have to hunt it down. Yeah, I don't know what we did with that. Anyway, it was a pretty decent pullback into that zone. Remember that night we looked at the yellow? this
Mhm.
yellow symmetry, and you were like, what would we do next, right? We had that nice pullback into that smallest symmetry point. I'll keep looking for it while we're talking, just in case I can find it. Yeah, I don't know what I did with it. 50 maybe here. Oh, here we go. Here it is.
Mhm.
Or here's one of them, 51. Yeah, I bet I know. I bet there's another one sitting over here somewhere. Anyway, we found the yellow symmetry points, and we had one, I think, right up in here. So it's holding up. So again, what would I do for Bitcoin, right? I mean, if we broke below this 61,000, I'd start to get concerned, right? Because we proved this turquoise symmetry is pretty significant. It was probably the most significant thing we saw on all the work we did there, right?
Mhm.
Without getting in anything else and getting, beyond what we've already done, I would just look at that and say, unless we break this low right here, I probably wouldn't get too concerned. I think we saw
I just bought 4,000 right before we went live.
nice.
I don't really have a means to my buying strategy. Just whatever I get close to $5,000, I just put it in. Especially if we're below 70,000 right now, I feel like it's like I'm buying an asset that's worth $1 million. The rest of the world just hasn't realized it yet. So every chance I get to get one more Bitcoin or just a little bit more of one, I'm like, I'm buying. Fuck it.
Yep.
If
I
it
get
comes
it.
down, crashing down, I'll buy more. I'll just work harder and buy more. So
I get it.
I wish I could do it the shit that you do. I'd trade it.
Yeah. And so right now you can see it's kind of just trading around up in this area. And see if I can blow this up a little bit more.
It's the only asset I think in the whole world that you buy and you hope price crashes. You
So
just want to buy more of it, at a better price. So
just taking care of a couple things here before the close, and then futures close up here in a couple minutes. So here we go. I got my squared up. Okay, so I mean, right now the Bitcoin's holding up a lot like the Nasdaq, right? So we looked at the Nasdaq and the S&P holding up really, really well. Dow's the weakest one. So if the Dow starts to break that 38,524, I'm going to be looking at Bitcoin to see what it does. Does it start to play around with this prior low here? We could drill down into a lot smaller time frame, but I'd be looking at this. Does it break this prior low? Does it have any chance of breaking this? These would be 2 big points just because they're prior lows. And we could also look and see if there's any divergence in here. Let me just take a quick look.
Man, I'm so excited for after the halving. Every single cycle after the halving, Bitcoin just straight rips. And the fact that we're putting in new all-time highs before a halving is insane. The fact that Grayscale is exhausting all of their sell pressure. I mean, they still got hundreds of thousands of more Bitcoin to sell off, but they can only keep this charade up for so long before they run out of Bitcoin, and these exchanges are at all-time lows. The halving's coming in, man. I think we're going to 150K in the next short period of time, my friend.
Yeah, and I mean, so how would we know that? Well, I mean, I'll run some analysis on that next time, or I'll feed it over to you so you know.
I know you got to run. I know you got to run here shortly. So
yeah, but that's the key. I mean, I'm going to watch this Bitcoin and see what the Dow does. If the Dow hits that 35,824 or 38,524, and Bitcoin continues to hold up, that's a good sign, especially if the Nasdaq and S&P start to come down. So I'm going to look at these other markets relative to one another. The biggest thing to me, though, Ryan, is this dollar, right? I mean, everybody's against it. I'm going to flip over to that one last thing here, right? Everybody's against this dollar, and I'm not here to argue with all the claims people make, because they're probably right. I mean, it's the dollar isn't great. We got debt, we've got phony government, we've got everything, right? But what we still have is a ton of resources, right? We still have, if we look at the accounting equation, assets equal liabilities plus owner's equity, we have a ton, right, of owner's equity. That's what the globalists are trying to steal from us, is the owner's equity, leave us with all the liabilities and take them on, throw them on the asset side. So that's what they'd love to steal, right? We've seen that in many different ways, but the right now, we haven't lost it yet. We've sort of have lost our country. Maybe we're getting it back. But the point is, we're about to get it back. Is the dollar starting to pick up on that? Or is this just simply an inflation play?
Yeah.
I don't know. But sometimes one thing can lead to another, and it can expose stuff, right? It can expose the
Yeah.
skeletons in the closet. And that's kind of what we're looking for. So
Yep.
that was a big thing I wanted to show is this dollar, because this is pretty significant, because I don't think anybody's calling for this dollar to go up.
You are, my friend. You are. And I'm very excited to see how this plays out.
Yep. Cool.
Let's do it, brother. Well, man, thank you for coming on, Craig. You want to throw yourself on full screen, man. And, anytime you got another message like this, you want to come and jump on here and give us a heads up, man. We greatly appreciate it.
Yep. Sounds good.
All right, brother. Have fun with your daughter and have a great day.
All right. Thanks, Ryan.
Thank
Thanks,
you.
everyone.
Bye. All right, folks. I got Craig's Twitter down below in the description. So if you guys get time, swing down there, give him a follow. He's getting ready to start doing this on social media a lot more. So he's going to be putting out a lot of great content over the next couple of months. And we're going to be over here helping him get his foot in the door. And hopefully he'll have his own show up here on Rumble and YouTube and Twitter and everywhere else in a very short period of time. So God bless you guys. Hit that subscribe button, hit that like button on your way out the door, and get ready for some excitement in the market. God bless you guys.
Run.